What changes are coming to the condo market in Madison, Wisconsin? Are you thinking about buying or selling a condo in Madison, Wisconsin? There are some important changes coming to the condo market, and they could affect financing, monthly dues, buyer demand, and even property values. These changes are tied to how lenders review condo and HOA communities, especially when it comes to reserve funds, budgets, deferred maintenance, and overall financial health. For years, many condo buyers could get through the lending process with a streamlined review, especially if the building met certain basic requirements. That process is starting to tighten. The biggest reason is risk. Lenders want to know that condo associations have enough money set aside for future repairs, maintenance, and major building expenses. They also want to know whether the building has unresolved issues, pending litigation, insurance concerns, high delinquency rates, or expensive projects that could affect homeowners down the road. In a market like Madison, where condos can be a great option for first-time buyers, downsizers, students, investors, and people who want lower maintenance living, these changes matter. So the first thing is that reserve requirements are increasing. One of the biggest changes is the minimum reserve allocation. Beginning January 4th, 2027, condo and HOA project budgets will need to allocate at least 15% of their annual assessment income into replacement reserves. That is an increase from the previous 10% rule. So why does that matter? Well, if a condo association in Madison is currently putting aside 10, 11, 12, or even 14%, it may need to adjust its budget to meet the new standard. In some cases, that could mean higher monthly HOA dues for owners. For sellers, this could affect how buyers look at the property. For buyers, it means you should pay close attention to the association's budget, reserve study, and monthly dues before writing an offer. The second thing is that more condo projects will face full reviews. Another major change is the elimination of many limited reviews. For loan applications submitted on or after August 3rd, 2026, Fannie Mae and Freddie Mac are largely eliminating the quicker, more streamlined limited review process. That means almost all established condo sales will be subject to a full review. A full review is more detailed. Lenders may look closely at the association's budget, reserve funding, insurance coverage, delinquency rates, pending litigation, inspection reports, and any signs of deferred maintenance. Small condo communities with 10 units or fewer may still qualify for a project review waiver, but most larger communities should expect more scrutiny. So third, that means some buildings could become harder to finance. Here is where this becomes especially important. If a condo association fails to meet the reserve requirements or other lender standards, the building could become non-warrantable. A non-warrantable condo is harder to finance because many traditional lenders will not approve conventional mortgages in that building. That does not mean the condo cannot be sold, but it can shrink your buyer pool. Buyers may need different loan products, larger down payments, or more flexible financing options. In some cases, buyers may walk away entirely if the building does not qualify. That can affect marketability, days on market, and ultimately the value of condos within that community. And the fourth point is that buyers and sellers need to prepare earlier. For buyers, the biggest takeaway is simple. Do your homework before getting too far into the process. You will want to review the HOA budget, reserve funding, meeting minutes, insurance information, special assessments, and any known repairs or litigation. You will also want to work with a lender who understands condo financing and can flag issues early. For sellers, preparation is just as important. Before listing a condo in Madison, it may be worth gathering key association documents ahead of time. That way, you can identify potential red flags before a buyer and their lender uncover them mid-transaction. If the association has strong reserves, clean financials, and no major unresolved issues, that can actually become a selling point. The condo market is not going away, but the lending rules around condos are becoming more detailed. That means buyers, sellers, and condo associations need to be more prepared than ever. If you are thinking about buying or selling a condo in Madison, Wisconsin, reach out before making any decisions. I can help you look at the market, review the risks, and understand what these changes could mean for your situation. You can reach us by giving us a call at 608-345-6594, or you can always email me directly at jdholt@kw.com. I hope you enjoyed this video today and found it informative, and until next time, be well.